Hey guys. Alrighty, so here we are with kind of an interesting situation. Let me just mute some people. Hey guys, welcome to everyone who's here. We are potentially setting up for a short setup here. So, for those of you who don't know how this works, we need touch of the Bollinger higher close, lower close, like we had down here, but we also need it with confirming evidence. So that confirming evidence can be one of 4 different types. So we're taking our trades off the 2 minute, waiting for a Bollinger touch, and then this pattern that we're waiting for now. At the same time, we need what we call confirming evidence. Now, let's just check that we have confirming evidence. This touched the lower Bollinger. The lower Bollinger was 250 and the low was 250. And then we have a single bar which made a lower low than we've had so far in a lower close. So at the close of this bar, we became downtrending according to our rules. At the close of this bar, we became downtrending according to our rules. We're still downtrending even though we're in a counter trend rally. So any short setup that we have now, which is a 3-stage process. Step 1, touch of the lower Bollinger. Step 2, 1 or more higher closes. Step 3, 1 or more lower closes. We place this is one that went on before. It wasn't actually a trade, but the pattern is right. Okay, this is potentially a setup. And we have, if this closes a shooting star, this will be a retest concept setup. I'm just going to start placing the order at the moment. Now, one of the tricks to doing this shit for real is that you get flustered if you wait until the last minute. So what you absolutely don't want to do is just wait, is these 2-minute bars close every 2 minutes, obviously, being 2-minute bars. It's 2 o'clock and 2 minutes past 46 seconds right now. So what you don't want to do is wait until it's just about to close before you set up your order, because then you're going to be late, you're going to get flustered, you're going to get mistakes. So to a large degree, doing this right is just about keeping an eye on the time. So it's not going to be a shooting star here. That's impossible now. So I don't have to worry about setting up my chart. But remember, our setup rules are a 3-stage thing. Step 1, touching the upper Bollinger. Step 2, we need a lower close without breaking the high of this bar here. And step 3, we need a higher close. So it looks to me, with 31 seconds to go on this bar, that we're most likely going to have a lower close, and then we're waiting on a higher close, and then we'll take the setup. That's all it is. So should happen. I think it's going to happen. We'll see if it happens. All righty. So 58, 59, new bar. So we have a touch of the Bollinger, we have a lower close, and we have a higher close. If this remains a higher close, our confirming evidence is downtrend with a pullback to at least the moving average on 5 minute, downtrend with a pullback to at least the moving average on 10 minute. So therefore, our target is 2R. So it's 2 times whatever we risk. And our entry point is the nearest half pip or full pip below this low. So the low of this is 29.7 pips. So the nearest half pip is 29.5 pips. The high is 33.33 pips. And so the nearest half pip is 33.5 pips. If it breaks this high here, a double top is okay. So it's 33.3 pips is the high and 33.2 pips is the high. So this setup is definitely on the table. And so what we want to start doing now that it's 5 minutes past, we've got 50 seconds to go, is start prepping the order. So our low would be 29.5. Sorry, our entry point would be 29.5. Our stop loss would be 33.5. That's 4 for 4.5. And what I do then is I whack it into baby pips. I'm trading $500 R's now. I'm just trading $500 R's. So 1, 4. So I whack it into baby pips like this, and it tells me my position size is 1,250,000, and I'm going to go prep that in my order platform now. And that is a 4 pip for 8 pip, and it's 1,250,000. And there we go. All righty, 3, 2, 1, placing order now. Okay, and my order is placed, and I hope you can see what I did there is I started prepping this order about a minute before it had to go. So by prepping it early, I sort of avoided it being fucked with. Now I'm in the trade. I'm short. My target is 1.18, 21.5. Yeah. So usually what I do when I'm just in a trade is I take a moment to make sure all my shit is right. I use NinjaTrader, but all trading platforms, the same basic thing. I just make sure that everything's right. I calculate it in my head. Yeah, and then now is the time to take a break. It's incredibly emotionally fatiguing to watch your trade as though you like it's a football team and you're like cheering it on. Like what I find and what most people find is that when you do that, it fucks with your head in a really significant way. Graham Earnshaw has a really good question. Can you explain why it was okay to take the 2-hour target? So we did a very substantial review of the last 1,200 trades recently, and we found that we could get more out of the system by changing the exit algorithm on 2 out of our 4 types of confirming evidence. So the 2 combinations that we change are Bollinger Touch on the upper and trending on the, Bollinger Touch on the 5 and trending on the 10, and trending on the 5 and trending on the 10. Both of those, we go for a 2-hour target now, moving stop to break even. And if you go to the baseline spreadsheet, bring it for you. If we go down to all these different trades, we go right down to the bottom where we are now. I haven't done yesterday's, but you can see, and it's 29. Come on. So since we instituted the old the new exit algo, I've been tracking the new one versus the old one, and the new one is bottom line. The new one is way in front. So so yeah, good question, Graham. Thank you, man. And the reason that prompted that, Graham, is I'm on a very low-cost broker, and some of the other guys are on low-cost brokers, but some people were on high-cost brokers, and it just wasn't. The system needed some more juice, so this was a response to that, and it's improving things substantially. It's squeezed about another 25% out of it, which I'm really happy with. Doesn't seem to have affected drawdowns. It's a really good group effort, and yeah, it's really cool so far. And you can see now this trade is doing exactly what we wanted to. We got in here short. The stop loss is here. 4 pip stop, 8 pip target. Target is 21.5, which is right here. Sharia, we aren't going for 2R targets on DV yet, and we probably should, but the reason we haven't is because if you look at, that's an excellent question, Sharia. The confirming evidence on the baseline spreadsheet is here. If you look at how often we get DV trades, there's 3 of them. There's another couple, but we get hardly any of them, right? They're like 10% of trades. So we can't, it's not scientifically rigorous to go and change your whole system on the basis of 100 trades. Even if it makes sense, it's just not scientific. And you can see here that our trade is working right now exactly as it's supposed to. Yeah, the setup's doing exactly what it's supposed to. Now, when this gets to 1R, we move our stop to break even. So where is 1R? 1R is 4 pips below 29.5, which is 25.5, which is, we got to 25.6. So the stop isn't moved to break even yet, but I'll move it manually in a little bit. So right now, if it moves up to here, we leave the stop where it is. If it goes down one more time and then comes back up, we'll be stopped out for break even. So the idea is to get ourselves a risk-free trade as soon as we can. But it's not also that. It's emotionally extremely unsatisfying. Let's say we had this trade work and win and win and win and win and get almost to our target and then reverse up and turn into a loss. It just rips the guts out of you. It's like a nut punch. So you don't really want to do that. And Graham has a really good point. It's a downfall of this 2R target. You've got to watch it full time. No, actually, that's a very good question. Nearly all of the major softwares have some facility to move your stop at when it hits a certain point. So in NinjaTrader, which is what I use with Interactive Brokers, they call it automated trade management strategies. And there was the same thing on eSignal when I used that. I've seen the same thing on Pro Realtime. So you don't have to even, it's actually much better when you don't have to watch it and you don't have to care about it, right? Like it just happens magically. Let's just take a little look at what the bigger picture market's doing. The bigger picture of this market is it's a sideways market. On the 10, it's a sideways market on the 5. It's a sideways high volatility market on the 2. Sideways high volatility markets tend to be the best markets for this system. And you can see touch of the Bollinger higher close, lower close, long here. Touch of the Bollinger lower close, shooting star completes the setup. We're going down here. Touch of the Bollinger higher close, long, lower close, long. You can see that, and there's another one here. You can see that this setup is working not every time, but roughly the way it should. Touch of the Bollinger lower close, higher close, short here. So when the touch of the Bollinger higher close, lower close, long here gets up to here. So when you can see it working, it's kind of a good indication that it's most likely going to keep working. So one thing that it's important to understand about trading systems is that the biggest influence on your trading system performance is going to be the fit with the market type. So if we're trading a mean reversion system and you get a choppy market, you're just going to kill it, like you just are. If we're trading a mean reversion system and we get a trending market, all your mean reversion setups are going to lose. So if we go back to a trending part of the market, like say here, like going touch of the Bollinger, lower close, higher close, short here, that's a terrible thing to do. Touch of the Bollinger, lower close, higher close, short here, terrible thing to do. But fortunately, we have a methodology that stops us from trading in that period. Otherwise, what you'd see is the traditional weakness of mean reversion systems is what they call tail risk, where because wins and losses cluster in any system that's good, they cluster all together. So you get 10 losers in a row and then 10 winners in a row, and it sucks to do. All right, so if we look at what's happening here, we had the market move down reasonably substantially to about halfway. Usually if the market's going to go up, it goes up pretty hard from there. I would say this is still a coin flip. Like I would say it's not certain that it's going to get to our target. I would say it's probably a 50-50 call, but a 50-50 call where you make double your money is a good bet. Like if you imagine a coin flip, you flip the coin, you get double your money. It's a good bet. And what we're seeing now is that the market so far has soaked up a lot of buying pressure. So the bulls pushed it up here and the sellers drove it back down. The bulls pushed it up here, sellers drove it back down. Bulls pushed it all the way up here, sellers are pushing it back down. Once we go below here, we've hit 25.5. So my job now is to move my stop to break even. So I forgot to set my automatic move to break even thing. And now I'm at break even. Any questions, guys? Happy to take questions. Anything you want to know, any questions about the systems, any of the rules. Don't care if you've bought it or haven't bought it. Ask away. I'm here to help. Just post them in the chat if you got questions. So one of the things that that comes up is often trading can bring up really strong feelings. So you can see that my that it's kind of close to my stop because I've moved it to break even, right? So I was feeling just now a little bit of like anxiousness, anxiety. Oh fuck! I hope that doesn't happen. That's going to make me look like a cock. Oh fuck! I want this to happen. And what happens if you don't express those feelings and feel them deeply and completely? Your subconscious starts to block out shit that's happening and you start to trade like a noodlehead. So it's extremely important when you're trading and feelings come up. Sharia, it's a 2R target and it's at 21.5. Jan, is this an RTC? Yes, this is an RTC. So Graham, not sure. TradingView works pretty good for me. Not perfect, but pretty good for a cheap thing. I like it. So we have two mean reversion setups. We have the RTV, touch of the Bollinger, higher close, lower close, and we have the RTC, touch of the Bollinger, and then a shooting star within 5 bars of this without breaking the high. Now, the reason why we lump them in together is because conceptually, what we're looking for is, you can see this market going down, up in a zigzag pattern, right? This point here is where it breaks the zigzag pattern of lower highs and lower lows. Sharian, no, break even is 1R, not 1.1R. So if we look closely at this shooting star candle, what's happened is the market's gone up, gone down, gone up, failed to break this high and gone down. So the market has tried and failed to break this high. Okay. So the market's finding a bit of a flaw here. It's probably going to stop us out for break even, I'd say. But you can't go second guessing your shit and fucking with your shit. Like as soon as you start bending the rules mid setup, or you're just in that world of delusion, and if you break the rules once, you're a rule breaker. You know, it's like you know, you build 100 bridges and you suck one cock. You're not a bridge builder anymore. You know, you've got to be that trader that never breaks the rules, not even once. You never break the rules. Yeah. And there's not a lot to do. So for the guys who are watching 2-minute trading for the first time, most of you probably think that, oh, wow, it's 2 minutes so fast. I could never do that like a video game. But you can see here from us actually doing it, it's kind of boring, right? Like it's legitimately boring. Sorry, Cup, see you in the cup. Yeah, Jen, one sec. Let me show you. So our trending rules to become downtrending is, and let's look at it closely. What we need is a mechanical definition of what is trending and what is not trending. Because if we leave it up to ourselves, like I think I know when it's trending, it just fucks with your head. So our trending definition is a 2-stage process. One sec, let me just start this live thing. Okay, one sec. Ooh. Okay, so our starting the trending process according to our mechanical definitions is a 2-step process. Step 1, we touch the lower Bollinger. Step 2, we have a single bar candle that makes both a lower low and a lower close than we've had so far in the same candle. So in this instance, we start trending down here, and I'll cover how we stop trending shortly. So for example, here we touch the upper Bollinger, but we don't have a single candle that makes a higher high and a higher close until here. So our definition starts us trending here, we stop trending here. We touch the upper Bollinger, we have a single candle that starts trending. So we uptrending from this bar. And yeah, and that's the way it works. It's a pretty simple definition, but it's really robust. Looks like I'm going to get stopped out for break even here, and maybe about a pip away from being stopped out. And I'm feeling anxious about it. And I'm about 2 pipettes from being stopped out, and whoa, right up to the line. Not stopped out yet. Guys on other brokers, has anyone taken this trade been stopped out yet? Just message me privately if you can. Well, looks like it survived. Okay, so this is kind of an interesting situation. Once your trade survives a scare, it's actually likely to work. You can see it sort of survive. Our stop loss is here. It sort of survived a scare, and now it's looking a lot better than it was. So our target is 1.18215, which is right down here. And we're stopped out. Okay, so this is kind of an interesting situation. Our old exit algo would have been a target of 55. So our old exit algo would not have got there. The new exit algo is a break-even trade. And it's good that we moved our stop to break even here, because otherwise we'd be stopped out and we'd be fucked. Now, what's worth noticing is that our definition of trending switches off in a couple of different ways. One of them is by touching the upper Bollinger. So obviously we'd stop trending down when we touch the upper Bollinger. Another thing that stops us is going 20 bars without making a new low. We're nowhere near that. But the third thing, which is interesting, is when we have a close above both moving averages, and then a close below both moving averages, and then a close above both moving averages. You can see here the close is 297, and the second EMA is 280, so it's not a close above. No, it is a close above both moving averages. So at the close of this bar, which starts at 220, ends at 230 in 45 seconds, we will stop downtrending. So we don't have short confirming evidence. So the next thing to keep in mind is that while we are trending up, if we make the highest close in the trend on a single bar decrease in ATR, and this is just average true range 14, the standard parameters on most platforms, if it goes at the close of this bar, which is going to happen in 20 seconds, this goes down like this, we're going to stop taking short trades and start looking for long trades. And so what we have here is a set of rules that govern when are we looking for mean reversion and when are we looking for trend following trades. So we have a close of this bar and it was on a single bar downtick in ATR. So we're no longer taking short trades. Now we're looking for long trades. But don't forget that every long trade needs confirming evidence, and we have no long confirming evidence here. So we don't have to worry. We're not in danger of taking any trade at all. Graham Earnshaw, no need to worry about high and tight. No, there's no requirement for high and tight on a hammer. Good question. Anyone else got questions? Just ask them in the chat. Happy to talk about any of the rules, anything you want to know. Okay, so something interesting is happening here. When this indicator, when ATR makes a new high, we're looking, our decreasing volatility mode switches back off, and we're looking at taking short setups again. Okay, so we are taking short setups again. We have an extremely wide setup. This is a really crappy setup. Our maximum target, if we get a higher close, is this, which is the lowest low in 25 bars. So we exclude shitty setups by saying that the target has to be less than the lowest low in 25 bars, which stops us taking a setup with a target all the way down here. So I can just eyeballing it, I can see that that's going to be way further now. So, but this may change. It may bounce back up and paint us a nice setup up here. So now we have to pay attention for a little bit. Do we have confirming evidence? Maybe we do. We don't have short confirming evidence on the 10-minute. So that is a bust. Donna, that's welcome, and that's a really good question. Okay, so let me go over this this chart setup for those who haven't seen it before. We're using a Bollinger Band. Let me just bring it all up. Where is my object tree? Okay, we've got a Bollinger Band. It's the standard 2 and 20 parameters, so 2 standard deviations, 20 period. We've got an 8-period exponential moving average. We've got a 21-period exponential moving average, and we've got a 14-period average true range, which is the standard parameters. Oh shit, I just took my Bollinger Band off. And we have a 2-minute, a 5-minute, and a 10-minute. I like it like this. Some people like to arrange their chart a different way. This works for me, but I've got kind of an unusual eye. So some people like black charts. I don't. Donna, also good question. It's been traded and currently being traded on E-mini futures, micro E-mini futures, the NQ, which is the NASDAQ futures, gold and crude. I think it's suitable for any, and also all the major currencies. I don't think it's suitable for anything where there's significant spread or liquidity issues. So it's not going to work with Bitcoin. It's not going to work with smaller markets. Would probably work with the bigger commodities like sugar and soybeans and shit like that. It would probably, but I haven't traded it, work with the most liquid stocks. Anything outside of the top couple of hundred stocks, I wouldn't have thought it would work. Okay, so now we have an interesting situation. We are trending down because we have a touch of the lower Bollinger. The lower Bollinger is 240 and the low here is 240. Then we have a single bar making a lower low and a lower close. So according to our rules, we're trending down now. And we have a low here of 20.9. We have a new low of 20.8. To paint a setup, we need a higher close, then a lower close without breaking this low of 20.8. This touch of the Bollinger and higher close can happen in the same bar. So that means, and we're at 39 and 12 seconds past the hour, so that means we're potentially about 2 minutes and 45 seconds from the setup. So it's time for me to stop fucking around and get my head in the game and check that we have confirming evidence. We're touching the lower Bollinger on the 5-minute and we're touching the lower Bollinger on the 10-minute. So we juice our win rate. If you look at a 2-minute chart, it's like a choppy, sloppy piece of crap, right? The way that we discern all this noise from signal, from actual real signal, is we require confirming evidence. So you have 3 time frames saying the same thing. Your odds are flipped a bit in your favor, and it's just a much easier play. Okay, so you can see this is happening now, right? We are pretty close to getting a setup. So now is the time when we start to figure out, have we got a decent risk reward? And what is our parameters and what's our position size? So the high is 24.6. So our entry point would be 25. Our stop loss is the nearest half pip or full pip below 20.8, which is 20 and a half. So we're 20 and a half stop, 20, and a 25 entry. So we're risking 4.5. I happen to know the position size for that off the top of my head because I took another one with it yesterday. And let me just start prepping my order. So all right, placing the order now. Okay. Now this did not make a lower close, but it made a hammer candle. And this also completes the setup. And the hammer candle is defined as a candle with a lower wick, which is this bit here, equal to or greater than 2 times the real body, which is the colored bit, which can be black or white, and a close in the upper half of the range. And you can tell just by looking at it that that's the case. So we're going to go, I have an order to go long if we get above here. And you can see this little bitch is about to fill. Maybe, come on, there you go. That's how it works. And so we're long. Our confirming evidence is a Bollinger touch and a Bollinger touch. Now, this is a true mean reversion trade, as opposed to one where the confirming evidence is trending and trending. So one of the things about mean reversion trades is they tend to work in choppy markets. So because we're talking about a choppy market, you can't bet on like a swing trade. You can't bet on it lasting all day. So we're going for 1.1 times our risk, rounded up or down to the nearest half pip. So here, this was 4.5 multiplied by 1.1 is 4.9, rounded up to 5 pips. So that'll give, and you can see here that we're pretty close to our target of 1.8, 30.0. Okay. From Kenneth, when an RTV order is placed but not filled, we move the entry to the new bar. Very good question. No, we cancel the order if it's an RTC, but in a practical sense, nearly always, if this isn't filled, it's going to be a lower close, so it completes the original RTV setup. So in a practical, so technically yes, but in a practical sense, no. It's and donut profit is twice original bar entry. The profit, it depends on the confirming evidence. We have 4 different types of confirming evidence. Our 4 types are Bollinger touch. So here you can see we at the same time as we touch the Bollinger on the 2, we touched it on the 5 and touched it on the 10. That's type 1. Type 2 is trending, which we had before, with a pullback to moving averages. Type 3 is walking up the outside of the Bollinger, which happens after a single bar close outside the Bollinger Band. And it continues until a single bar with a lower high than the Bollinger Band. So in this instance, we would start walking up the Bollinger Band here and stop it at the close of this bar. The fourth type is decreasing volume, which is complicated. So my point is that our profit target changes according to the confirming evidence. So when we're Bollinger touch, Bollinger on the 5, Bollinger on the 10, we go for a 1.1 times our risk target. So this is a very conservative target. And why do we do it that way? Because if we look at this market, look at the market we're in, it's just basically choppy bullshit, right? Like you can't say with any certainty that it's going to get all the way up here or all the way down there. So in a choppy market, your optimal strategy is to go for very quick, small wins with a very high win rate. And so that's what we're doing. Okay, Graham. In this current RTV trade, does the hammer as the third setup candle confirm the entry rather than a lower close second candle? Yeah, this one confirms the entry, and the reason is this is a 2-minute chart, but if you drilled it down to a 20-second chart or a 10-second chart, you would see the market go up and then down and then back up again. But it would do that without breaking this low, and that's what we're looking for. That's the sign that the market has stopped going down and it's safe to go short. And by safe, I don't mean that it's like we know what's going to happen. I just mean the odds are very slightly tilted in your favor. Like this is like none of this is, yeah. All right, hit the target. You can see here. So we are 2 trades, 1 break even, 1 winner for a 1.14 R win, 5 pip target on a 4.5 pip stop, and waiting for the next trade. Let's see what happens. Donna, yes, I use NinjaTrader. I kind of dig it, but it's really, really ugly and kind of clunky software, but I've been using it a long time. So I'm an old dog, unwilling to learn new tricks. Sonia, really good question. What's the good time to trade the system? So the time that we're trading now is not actually the perfect time. The perfect time starts from probably 2 or 3 hours from now, and for the next 12 hours after that. All the US day is fine. Actually, it's fine now. It's just not as good as it is later on. But I go to bed early and I get a family, and I don't want to, I want to spend time with my family. I don't want to. I want to do my work in work time like a normal person and clock off like Fred Flintstone and go home. So any time from the start of the European session. So about 7 in the morning UK time onwards is about right, or about 2 a.m. Eastern time in America. Kenneth, given that decreasing vol mode stays on even after the trend had started, do we still take hammers, shooting stars in the direction of decreasing volatility mode after the trend has ended? Yes, we do. Yes, we do. The DV mode stays on even when the trend is off. There are 3 things that switch decreasing vol mode off. Let me just check that the market's not doing anything. And sorry, 2 things that switch it off. The 2 things that switch it off are, firstly, making the highest ATR value for the trend so far. And the easy thing to do is when you get in a trend, you immediately notice this is the first bar of the trend, so this is the highest ATR value so far. The second thing that switches it off is breaking what's called a pivot 2 high in ATR. So this was a pivot 2 high. So a pivot 2 high is a high with 2 bars to the left of it and 2 bars to the right of it. And so it's just a less sensitive form of the spike high. So for example, if we're in decreasing vol here, then this bar would take us out of it. All right, we have touched the lower Bollinger on the 10, the 5, and the 2. Now, for those of you who were looking at this long setup saying, oh, I think we should have gone for like 2 to 1, 3 to 1, you can see exactly why we went for 1.1. Our target was 1.830, which was here. It actually top ticked us in and then would have stopped us out. So you can juice the win rate of almost any system by making your target small. And so our rationale here is we went long here, stop loss here. We weren't trying to go all the way up here. We're just trying for a little bang. And now the market wants to go down. We'll see what it does. All right, now, one thing I'd like to point out is that when you see this ATR as a proxy for volatility, see how ATR has a strong statistical tendency to go down once it starts going down. And then once it reverses, it has a strong tendency to keep going until it reaches an extreme. It's close to an extreme now. But my point is that you don't have to worry too much about decreasing volatility while you're in this up mode, because it's going to pop back out of it anyway. So you don't really have to care too much. All you're looking for is touch of the Bollinger, higher close, or hammer and lower close. Now, if we look at the time here, it's 256, 24, 25. This is potentially a setup. If this is a hammer, it completes the retest concept setup. So we have to be aware of it. You can't just be a fuckhead and just like sleep on it. And so I'm going to figure out if this is a hammer, the entry would be 17 and the stop loss would be 14. And that would be 3 for 3.5. And I happen to know the position size off the top of my head. So I'm going to prep my order just in case. All right. And unlikely to be a setup, but you never know. And you never know. Okay, so it's now 3.5 for 4, so I would have to adjust the position size, which I'm doing. All right, so if this closes a hammer, and a hammer it's not going to close as a hammer, so don't have to worry about that. 10 seconds to go, not going to close a hammer. Sherry, the entry was 250, correct? All right, if we have a lower close, we have another setup and we'll get long. So unless it breaks this low here, in which case the setup is off the table. So what I want to point out to you is that this whole process is like super robotic. Like there's absolutely zero thinking. There's no analysis. There's no, I think it's a head and shoulders. I think it's going up. You think it's that. Like all of that stuff on a 2-minute chart just fucks with your head too hard. Like it's just my belief. No one, like I'm pretty fucking good. And I don't think anyone in the world is good enough to do that consistently, day in, day out. Like I can do it for one day, but no chance I can do it for a month straight. And so by having these rules that suck the fun out of it, they also make it viable. So, yeah. All right, this isn't going to be a lower close, so we're waiting on a lower close. And you can see that, oh, it's maybe a hammer candle. Okay, I'm going to have to prep this order just in case. So 20.5 and 14 is 6.5, and just get my position size calculator. Good. Okay, I have to place that order. Position size. And I'm a little bit behind, so I'm starting to get flustered because I'm a fuckhead. Okay, the order's placed now. Okay, so my order is to go long on the break of the high, stop loss here. 6.5 pip, let me just check. That is 20.5, 14, 6.5. So it's 6.5 for 7, and we are long. So here's where the target looks. Same basic shit as last time, right? Like before we were long here, stop loss here. Now we're long here, stop loss here. Now, one of the secrets of, okay, let's talk about high and tight. High and tight, if the market is a perfect trend, which none of these are perfect trends, then your high and tight maximum target is just past the 21 EMA. If it's anything other than that, and I would say 70, 80% of the time, the target is the highest high in 25 bars. So this is our highest high in 25 bars. Is this target lower than here? I don't even have to check. It's almost certainly, yeah. And what I want to point out is you can see for yourselves the price action once this setup is completed. We've got bulls jumping in once they see this completed retest, because now the market doesn't look like it wants to go down, right? Like a couple of bars ago, this market looked like it wanted to go down. It really did. It's like a downtrend. And then the secret of this is surprise. Anything that catches traders by surprise, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 18. This is the maximum high and tight target, Graham. 1 minute, 1.18358. Anything that catches traders by surprise will cause a bigger move. And you can see immediately traders were expecting it to go down, and we didn't jump in on and bet long until it broke the high. Hey, Daniel, is that you jumped in, man?
Hey, Scott, were you talking to me just then?
Yeah, I was just wondering if it was you that was jumping into the chat. I thought I'd say.
Oh, yeah.
As your dad?
Yeah, that's me. Yeah, he's all good. I think he's jumping on now.
Cool.
Or shortly. Did you place this trade? Did you take this trade?
Yeah, I'm on this trade. We've had 3 trades, 1 break even because we were going for 2R, and 1 winner, and here we are about to hit the red, get ahead.
I literally just started 8 o'clock our time. So.
You've got daylight saving.
Yeah, I literally started 5 minutes ago. So
yeah, daylight saving's been fucking with my head lately.
How long have you been on the call?
An hour.
Oh, okay, fine, yeah. Because usually it would start at 8 o'clock our time. So obviously,
gotcha.
Yeah, still confuses me. The clock's going back.
Yeah, I've got to go in half an hour too, but hopefully this trade works and it'll be a successful day. I'm really quite happy with the trading today.
Cool.
It's
yeah, it's been good considering everything that's going on with like the election and things like that, where we thought things might be a little bit choppy and you're not sure what's going on. But if anything, it's actually been better because of it.
No one's surprised. I mean, check this shit out. What's the I mean, look at that candle yesterday. That's just.
I also think these.
Sorry, say again, Danny.
I just like these 2R winners. They just seem so like nice. Like when you win a 2R, winning a 2R trade is just feels better. And obviously the ones that you get to the 1.1 or 1R and you move to break even, like it doesn't feel it doesn't feel that bad when you don't win that trade because.
So this one here.
Obviously, I know you could have won.
This one here was really interesting. It made 1R move the stop to break even, but didn't make 1.1R, and then stopped out for break even. If we were going for 1R, this would have been a loss. And then this one here, going for 1.1R, just hit it, reversed. Would have been a loss if we were going for 2R. So far, so good. Like,
Yeah.
I mean, you can't get it. Like, my experience is luck runs out in trading, but so far, so good.
Yeah, no, I really like the new 2R.
Me too. It fills a hole. And it stops me feeling so bad about fucking comms and slippage and yeah, I'm looking forward to doing more research on it too.
So me and my dad were speaking. My dad and I were speaking yesterday. With hammers and shooting stars, like DV mode trades. Though the ones that pull back further to the 21 EMA, no matter what the confirming evidence is, whether you have confirming evidence or
Exactly.
any confirming evidence is enough to go for 2R, right?
The data that John Garcia did was totally unequivocal. Of those hammers and shooting stars that hit the 21 EMA as opposed to the 8, 83% of them made 2R.
Yeah.
It was just like a slam dunk, like on every level. And there's a rational basis to it.
Yeah.
Like, it's like just more of a spring pulling back rather than.
Oh, it makes 100% sense. Yeah, 100%.
It makes sense to me. So, and I really like that someone in our group can on their own bat come up with original research that improves the system, and everyone looks at it from every angle and goes, well, fuck, that's heaps better than what we were doing. Let's change it up.
Well, thanks for clearing up. I'm to know my dad's not in it yet because he now owes me 1R because we had a bet. I said to him, I was like, if it pulls back to 21 EMA and it's a hammer or shooting star, it's a 2R target no matter what, as long as you have confirming evidence. And he was like, no, blah, 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 and we're talking about it. Exactly. I was like, you owe me 1R, mate.
You're right, your dad's wrong. Right, and your dad is wrong. For those who are perhaps new to trading, there's a really neat hack you can do to stop trading fucking with your head. And one of the ways that trading fucks with your head is when you start thinking about money. So if you start thinking in terms of R and you never ever mention money, you don't say, I just made $300, I just made $5,000, I just made 10 grand. It's impossible to not have the association with money. And so what happens is it feels really exciting to make money, and then you get excited, and on the other side of the coin of happy when you're making money is sad when you're losing money. And when you get sad or stressed or anxious or whatever, then you start trading like a fucking noodlehead. So an easy hack is, you notice that when Daniel was talking, he was talking about R. If you just remove the words about money from your vocabulary and just think in terms of R, and this is something that Van Tharp it really came up with, you can improve your trading out of sight just from that. All right, so our target is 27.5, which is right here. Now, the big lesson from sideways markets, when you get a sideways high volatility market, there's almost no edge in the middle. So around here, you notice that in the middle of the range, down, up, up, down, down, up, down, up, down, up, down. It's just like a stupid thing to try and predict. In the middle of the range here, up, down, down, up, down. Whereas at the extremes of the range, at the top, at the bottom, all of a sudden we have an edge. But in the middle of the range, look at how fucked everything gets. Up, down, down, up, down. It's just really a hard game to play in the middle of a trading range. So the way to win when you're playing trading ranges is to only trade at the extremes. Only trade here and here. Hey, Chris, how are you, man? Donna, R is the difference between your entry price and your stop loss, and it stands for risk. It's how much you're risking. So if you're risking 3 pips to make 6, you're risking 3 pips. So while we're waiting for our stop or our target to be hit, any other questions? Anything you guys don't understand about the rules? Donna, not quite. R is the amount that you risk if your trade loses. So let's say you're trading a $100,000 account and you're risking 1% per trade. That 1% of your account that you plan to risk every trade is your R value. So it can be a fixed dollar. It can be a fixed dollar amount. Like for example, today I'm just trading $500 Rs. It can be a percentage. It can be a 1% or a 2%. But in the practical, for most people, practically, it's between 0.5% and 2%, and you don't really go above that. The idea is we want all our losing trades to be the same, because by having our losing trades very similar, we reduce the effect of luck. You don't want to have a situation where you've lost $10,000 on one trade and made $100 on another trade. You have a 50-50 win rate, but you're down a pile of money. Like, you can't have that. Yes, Sonia says, you have been disclosing system freely. So what's value addition in subscription? Sorry if I'm asking the wrong question. There are no wrong questions. I just don't believe in all that bullshit about, like, you have to pay. Learning the system is dramatically, and I mean dramatically, easier if you have the complete system rules. If you have like 30 hours of me teaching it on video, if you have everything written down, if you have access to daily review videos, if you have my spreadsheets where you can check every single trade that we've taught. So, okay, on the 28th, this trade was here and went short here, stop loss was here and it was a loss. If you can do all that, it's just heaps easier. So technically, no. We just hit the target too. So that's another winner. So technically, no, you don't need to pay me any money at all. It's just like heaps quicker, heaps easier, heaps more reliable. It's better to be part of a community. I don't know, if you want to do it the cheap way, fucking have at it. Doesn't hurt me. Like honestly, doesn't hurt me. But anyone who's planning on doing this for real would. If it only saves you, like, I'm charging $200 for the system. It's nothing. Like it's like literally one trade. I'd recommend starting. I'd recommend starting with just the basic system. It's $197, I think. If you want to, if you want to learn with me privately and be part of our private group, these guys get great results. They're really good. I recommend that. It depends how serious you are. Like, if you just want to have a muck around and learn a new thing, $197 is a great place to start. but you don't need to spend that if you don't want to. You can try and figure it out on your own. Like, like honestly, it's no skin off my nose if you know, I don't want to mislead anyone.
Hey, Scott.
Hey man, how are you?
Good, thanks. Listen, I just want to clarify something, right, on the rule changes.
Yeah, Daniel's already mentioned it. I can believe you owe him.
I already clarified it, Dad. Send me my money.
Hey, something about him being smarter than you and
Oh, yeah, well, that shit. Yeah,
senile and something old people. Okay, boomer, something like that.
yeah. Okay, so he asked. Sorry, so
Let's make sure he asked the right question. Let's.
assuming the question was around the confirming evidence for 2R targets, right?
For Hammerson Shooting Stars only.
Correct.
21 EMA, it's a 2R target, end of story.
So regardless of the confirming evidence.
Regardless of the confirming evidence. But if you think about it, there is no Bollinger touch on a hammer or shooting star. It's almost impossible.
Yeah, and there's also probably impossible to be a Bollinger walk as well.
Possible, but
it's possible, but yeah, well, like we've seen with the system, right? Just these edge cases somehow always end up coming out.
Yeah. It's I would say it's not impossible, just improbable.
All right, that's fine, because just the way when I watched your video about the rule changes, and in my head, I was
probably imprecise there. That was probably on me.
Yeah, it was like a global thing, right? Confirming evidence has to be Bollinger trending. I mean, yeah, trending or Bollinger trending. Underneath that, if it's RTV, it's this, and if it's a hammer shooting star, it's that. And
so if it wasn't clear, I should probably reshoot the videos, right?
Yeah, so hammer shooting star just requires any form of confirming evidence as usual, just so long as the pullback is to the 21 EMA or beyond. Okay, cool.
It's been a good day so far. It's been a fucking tight day. Like really good. Break even, winner. Nothing now.
So quick question, the last couple of days some of the 2R targets have a couple of times, if I just look at the last 3 that I've taken, 2 of them have stopped out at break even.
Yeah,
all 3 of them stopped out at break even, but 2 of them would have gone on to be winners if we had left the stop loss where we normally would, right above the entry.
Okay, so we've got one here that was a break-even trade, but I'm tracking on the old exit algo. This would have been, so we went long here, stop loss here. It made 1R and then reverse, stopped out for break-even, didn't make 2R. And under the old exit algo, it would have hit 1.1R about here.
Okay. I was just thinking that, is it not possible? I mean, what's your thoughts on at break even? I mean, at 1R, you close out half the trade in profit and let the rest run, and move your stop loss to break even, lock in half profits and let it run.
That is a really interesting question. So it's not a question of opinion, it's a question of statistics. If you think about what the effect of banking partial profits is on any system, it's reducing the standard deviation of the winners, right? So instead of having some massive winners and some break-evens, you've got everything like in between, right?
Right.
So by definition, that reduces the standard deviation of the winners. What's another way of stating reducing the standard deviation of the winners is increasing SQN or system quality number, or increasing Sharpe ratio. So almost by definition, that reduces the effect of luck, and reducing the effect of luck increases the risk-adjusted returns while at the same time decreasing the top line return. So the bottom line is it will, without running a proper analysis on it, it would most likely make less R but have smaller drawdowns, and do so in a way that is probably a good deal. Like in terms of, is it a good deal, like a good idea or a good idea or a bad idea?
Yeah, I mean, it was just my initial thoughts. It just feels like we're leaving money on the table, but you're probably right. Over the long run, it might dilute your profit so much that actually you're right, your R value, it might make you feel good, but you're actually not making as much.
No. My point is that it probably is a good idea mechanically. Like any partial profits reduce your top line, your top line expectancy, right? Like that's almost by definition. But if it reduces your drawdowns by more than it decreases your top line profit, it's a deal worth taking, right? So what I'm saying is it's probably a good deal without doing the proper analysis. It's probably a good deal, but it also adds an extra level of complexity. If you can do it auto magically in your platform, probably a good idea. If you're moving stops to break even manually and doing shit, it's probably an area of complexity that once a month you're going to fuck it up and you're going to have one extra error a month on your plate, which is going to probably be a bad deal. Sharia at 316 didn't touch the upper Bollinger. You can see it just misses. The high is 299 and the Bollinger is 301. Okay, and okay, so we might have a setup here. So we are trending down again after this bar. We're touching the upper Bollinger. So we can't have a setup. We could go into decreasing vol at this bar. So it's time to probably pay a bit more attention to the market. Lorenzo, this one didn't touch the upper Bollinger, so it's not a trade.
I'm sorry to interrupt, Scott, but this candle did touch the upper Bollinger.
This one here?
The one 314. The one on 314, it did touch the upper Bollinger.
Okay, so I've got my mouse over the candle right now. You can see the high up here is 1.18299, and the Bollinger high here is 1.18301. So Forex data can be slightly different across brokers. So if it touched on yours, you take it on yours. My broker might be different.
I'm looking at the trading view FXCM. So for me, it touched. It was
okay. Yeah.
A touch.
I don't know. I can only look at my own screen, man. Yeah. If it's different, it's different. Like, yeah. I can't trade off your screen. I can only trade off mine. And it's definitely like you can see it here now, right? But yeah, that's entirely possible. Like, you know, FX is not a real market, like say futures are. FX, every broker is a little bit different, and the data feeds can get a bit screwy sometimes. So, you know, FX isn't really what you'd call a proper market.
Yeah.
Okay, so we may go into decreasing velo if this is the highest close in the trend. The close here is 349. The close here is 350. On a downtick in ATR from here to here, you can see we've gone down. And so now we are not taking mean reversion setups. We're not looking to go short. Now we're looking to go long. Guys, I got to get out of here, but Chris, are you gonna stick around? I can leave you as the mod if you want to keep trading.
Sorry, Scott. Yeah, sorry. I've got to jump off in the next 5-10 minutes. I've got a medical appointment to go to.
Yeah, I've got to jump off too. I've got baby duties. All right, guys. So I'm sorry we're going to call it quits after like an hour and a half. Let's just recap the day, just so that we're clear about what happened. So at the start of the day, we went short here with the target down here. It made 1R on this bar, and then we moved our stop to break even, which was here. We got stopped out for break even. We went long on this bar with a stop loss at this bar. Just got the target before it broke down. Very lucky. Touch of the Bollinger, higher close, lower close. Went long on a break of this bar. Stop loss here. Didn't hit the target here. Hit the target on this bar, and that's where we are now. And Yeah, so what did we do today? We did 3 trades, 2.2R. Nice day at the races, not too difficult. All right, guys, I hope you learned something. And yeah, any more questions? Yeah, happy to help. See you guys.